Real love, now I see you. Yeah, you know I do, to make it through the times we had. I see it now, I see it now. Real love, now I break through to show to you that I'm more good than I am bad. I work it out, I work it out. And I'll be somewhere that you need me, and I'll be holding my breath, waiting for you to show.
Some days there's no one else who loves me like you used to. Some days I'm not myself, there's no one I can turn to. All the feelings that we shared are in the past. Your relationships are never meant to last. All the feelings that we shared are in the past. Your relationships
What's up, guys? It's been a long time. Give me one sec. Let me just get situated. I haven't done this in a while, so I'm a little rusty. Can't stop smiling like a goon right now, but all right. Close this out. Turn the music off. Too much screen real estate. Too much to keep track of. Okay, set up the whole right portion of my screen. Set up my cockpit station just in case shit goes down. All right, so nice little squeeze here as expected. So fast moving market right now. What's going on, guys? Okay, let me just make sure that I don't have anything up that is incriminating. Nope. Yeah, I don't know what would be incriminating, but just make sure that we don't have anything up that's a wallet or a hot wallet. Okay, what's going on, guys? Let me just pop the chat out. Say hi to everybody. I'm gonna just scan through the chat. I don't want to do like a whole roll call. Say hi to everybody. First person. Okay, responder. What's going on? Yodelay. Yodelay. Get out of here with that Yodelay shit. Okay, PJ. Julian, what's going on? LP, Sweet Canary. It's good to see you, Sweet Canary. It's been a while since I've seen your Sweet Canary on my chat box. Mr. K, what's going on? JE, Dusty, App. It looks like I am doing a roll call after all. Okay. Luna, App, Ryan. Good name, Ryan. You know what Ryan means? You know what the name Ryan means? It means Little King. Okay. All right, Keith, what's going on? 26K, here we come, possibly. This is kind of a sweet spot, but we'll get into that. Frank O, Crypto Clark, what's going on, man? All right, Coin Collector. Yeah, no, bull run ended much sooner than I expected. I don't know, honestly. No one knows. Anyone who acts like they do know is full of shit. You know, there's a lot of interesting things to cover, and we'll touch on that. We'll talk about, hey, is there still a bull run, right? So yeah, your guess is as good as mine. I think that we have some more in the tank. We have to weigh things on balanced probabilities, right? So we'll touch into some of the finer details. Alex, Andre, Parzival, what's going on, brother? What's going on? For everyone who does not know, we do not dox here, but Parzival and I go way back. Way back. Christopher, what's going on? Coin Collector, Keld, what's going on? Keld, I said your name too quickly. I didn't realize I haven't seen you in a while, man. Yeah, finally a live stream again. That's right. I took some time off. Kilgore. All right, Ross, Dave. All right, so we got a lot of people. And now it's just getting redundant. It's the same people. All right, cool. So, what's going on, Captain Youth? Captain Youth, it looks like you've changed your avatar. Captain Youth has some pretty nice beats, I will say. So if you like hip hop, I shared his music before, and I'm giving him a little plug again. But that song is nice, man. The song that you sent me that we played last time, that's a good gym song. I will say it's a good lifting song. And I'm talking like deadlifts, not bicep curls kind of music. So, okay, B Modular, what up? Love from New York City. Yeah, so I'm actually not in New York City. I'm in New York, but I am on the island, although, you know, you could say that New York City is an island as well. But okay, so yeah, let's get it started. I have a few things that I want to cover. Stream health seems to be good. You know, as always, as we've said in the past. Well, first let me introduce myself. My name is Ryan, aka Kenner and Clark. I'm one of the partners at BlockRoots. Myself and my partner Josh Rager. So this is the new BlockRoots platform that we're looking at right here on the screen. It's a community that's focused on order flow and market profile. So it's a little bit more granular, trading more at the atomized level, I like to say. It's definitely not for everybody. I think that it helps you develop a finer edge. This is not a trading group. We put this together, and it's essentially it's a course. So there's a ton of video content on there. Yes, we do have a Discord community. It is not a hand-holding platform whatsoever, but there have been some really fine traders that have come out of it, and we've actually had traders graduate and actually just recently get jobs working for firms and prop shops, which is pretty damn awesome. especially when you realize that most of their learning took place in BlockRoots. So this is our platform. We also have a newsletter. Okay, so we have a newsletter. So we have a newsletter which is sent through Substack that's connected to the platform. It's sort of like a a bird's eye view of what's taking place in the market. So this goes out on Tuesday nights. Nothing ridiculous, right? Just kind of a little bit of reconnaissance on the market. And yeah, so we want to thank you for tuning into the YouTube. I haven't done a YouTube in a while. I really I need to actually take a little time off from the YouTube. Hunters got to hunt. That's the way it is. Honestly, what I was doing was getting burnt out. Right? You have one expectation for yourself in terms of the pace that you can keep up with. And I am first and foremost a trader. So when the market's moving, if I'm in a live stream and the market's moving, I'm honestly getting anxiety because I want to be part of the action. And even if I don't want to be part of the action directionally, I want to be able to, make moves and protect myself, especially during times like this. And I think that the problem with a stream or the problem with anything is, when you're trying to focus on shooting free throws, for example, you're not going to be one eye on something else. So trading requires a tremendous amount of focus. So I got a little burnt out. And now we're actually going to resume doing the streams again. And Josh and I talked last night. And now Josh is going to be picking up videos as well. So things are looking good. Okay, things are looking really good. It's been a phenomenal month for myself trading. I had a few hiccups in the middle, so I think maybe we could talk about those because I was absent from the streams during that period. But yeah, it's been overall, it's been an exciting market to trade. If you haven't already, go ahead and hit the like button. What we're trying to do is get prioritized by the YouTube algo, right? I hate to say it, but that's the way it works. That's how they ultimately put our videos in front of you. And if you like to watch our videos, we appreciate the feedback. But there's nothing required there. So at the end of the stream, we're going to do a giveaway. We're going to give away $200 in Bitcoin. Since we've been absent, I feel like that's the right thing to do. Probably gave away more than one Bitcoin this year, right? When you think about all the Bitcoin giveaways that we've done in the last 12 months. So yeah, that being said, there's a few things that I want to touch on. Okay, so this is the platform. Let's get away from that. We'll get back to this. Get away from the insights. I think I've said hi to everybody. And yeah, so we're going to take a look at BTC, obviously. But the first things I want to talk about is what's going on in traditional markets, because there's a little bit of, it looks like things are becoming a little unhinged. And I think the best way to put this is, yes, there is a story, a little bit of David and Goliath right now, right? And hedge funds got ran over by retail. All right, so I have, let me just make sure I have my bullet points on the side. Hedge funds got ran over by retail. Okay, so forget about what's going on, Stan. I gotta say hi to my buddy Stan. So forget about trading for a second. Forget about markets. Any kind of professional pursuit, they try to hide behind a wall of obscurity. So this could be your money manager. It could be your accountant. I don't want to say it's your doctor because your doctor is a very important person in your life. When it comes to your health, I think that there's a reason why people are elevated to a certain stature because you're unable to do certain things for yourself, right? So there's a whole bunch of jargon that comes along with a different field, right? With a very specific field. When it comes to financial services, when it comes to things like accounting, you'll find that professionals have tried to wall themselves up from the outside public, especially when you think about accounting, because of some of the language that's used that really when you look at certain words that they use and then you realize what they actually are saying, you're thinking, why use that jargon? Why use that sort of nuanced language? And what it is it's meant to obscure certain things so that you feel like you're unable to do your own work. So we've seen this in financial markets for a really long time. The whole idea, from the way I was raised, it's not like my parents were, tremendously financially savvy whatsoever. Was, my dad has a 401k, right? He always had a 401k. I was the only person who went to school for finance, right? Initially, I had to switch between biochemistry, but finance and econ. So you're raised thinking, oh, you just put money in your 401k, your money manager takes care of that, passively indexed, blah, 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 blah. This is all bullshit, right? Not all of it, but a lot of it is just the fact that you're not going to dedicate the adequate amount of time into learning it yourself, so you relegate that sort of responsibility to someone else. So finance professionals have benefited from this, right? They've also benefited, meaning that you've had to come to them to get things done, which means that you've had to pay them a fee, right? So I've argued many times before, I used to manage other people's money. So whenever I was doing that, right, when I was managing a very small fund, and I just say small fund because I went from managing accounts to managing a pooled capital, and it's small in the standpoint that even if you have $100 million in a fund space, you're small. So I was small relative to that. There comes a point when a lot of fund managers, a lot of CTAs even, are returning just market beta, right? They're just returning the market, but they're still charging, some type of fee structure, right? They're charging a 2 and 20. Okay, so they're charging 2% of assets under management, and then they're charging, let's say, 20% of the returns for the upside. Okay, so they are able to participate in the upside, but they don't have to worry about the downside. So, fund managers returning beta, money managers not really returning anything above the S&P, and they're still earning a fee to do this, right? You're still paying them to invest your money. Now, society is to a point where there is a tremendous amount of resources that are at the fingertips of retail investors, right? So you have access to information like never before. It's something that's kind of you throw around a lot like a joke, but everyone can Google something, right? If you do the work and sift through sort of the detritus and split the noise from the signal, you can pretty much learn everything, right? I will say you don't want to learn how to be your own doctor, right? But even then, you could learn certain things that, whether it's a homeopathic medicine, for example, right? I'm not going to go too far down this because it gets very woo-woo, but, why don't you increase the amount of turmeric in your diet, right? A little bit of turmeric in your tea with some black pepper, increase the bioavailability of it, a little capsaicin, right? And then maybe you're helping out your immune system. You're helping out your cardiovascular system. Maybe you don't need to take as much of that Tylenol or aspirin as you normally would, okay? Because you're having these other, maybe you're finding anti-inflammatories in some tree bark, whatever. The idea is you've done a little bit of research and you've sort of you've reduced the cost that you would have to spend somewhere else to get that help. In finance, you see the same thing, right? You want to get your car fixed. Now they're making cars so that you can't fix your own car. My new car, I cannot do anything to it. I cannot stick my hands in it and fix the engine. Whenever I was in my late teens and 20s, and me and my boy Parzival will know about this, we had Acuras, Integras and Hondas, and you could stick your hand in a Civic and you could do all your own work, right? Plumber, same thing. It's a specialty job. Okay, so now retail and the financial system has access to information like they've never had before. They have access to tremendous tools, right? You have access to things that, years ago only HFT had access to. Years ago only big name institutional funds had access to. Talking about the availability of order flow data, the availability of just daily data with regards to any trading activity. In traditional markets, you have to pay a lot for it. In crypto, it's basically free. And then you also have a really reduced cost structure, right? So feeless brokerage platforms, feeless trades, subscription-based trading services. So the barrier to entry now is much lower, okay? And the playing field is a lot more level, all right? So it should be at some point understood that retail is not, you can't just use retail as a derogatory term to talk about people like they have no idea what they're doing. The same sort of high-level thinking that can make someone successful as, an architect or an engineer or it doesn't matter, right? An artist who could see patterns in things. The same sort of intelligence that's behind that can translate to markets, right? I can't really quantify what makes me a good trader anymore. It's just something that I know I can at the end of the day. I could quantify my performance and I know my harder edges and I know my sort of mechanical setups, but then there are a lot of these edges that I have that I'll say are just alpha that are really just, time of just droning in and looking at the screen. So there's no reason why Wall Street Bets people can't do that. There's no reason why, you can't dedicate your time to this and play this game. A player in the, sound is not right. So how does the sound, guys? Then I'll get into some of the other points. Mr. K said sound is robotic. I swear, Mr. K, if it's just your sound, I'm stopping just for you. I'm going to reach through the computer. I only say that because he's a member of BlockRoots. So is the sound robotic? Let me just get a little feedback and then we'll adjust the sound. So just give me a little feedback. How is the sound? And then I'll just change the audio input capture. Yeah, so I take fish oil, vitamin D, turmeric every single day. Okay. Yeah, you heard me, Mr. K. Sounds fine. Mr. K, you're getting choked. Mr. K, what did I tell you? Take those speakers from the 1980s and update them. Okay, Mr. K has those big speakers that are dark wood, and they have like the big the big black styrofoam on the outside of them. Okay, a wee bit robotic. All right. So what I was gonna say is, there is this dichotomy or separation, this void between retail and institutions and professionals, right, in markets. But it's not the same as the split that might occur between the guy that could play ball at Rucker Park, in New York City, and a player in the NBA. Okay, there might be a guy on a street corner in the city, right? It's got to be a guy in New York City who can dunk and just destroy a lot of NBA players, but he never had his chance to go play in the NBA, and now he's just kind of asked out of the situation, right? He's not going to be in the NBA. There is a barrier that will not be penetrated. Let's say there's a great player, right? LeBron, right? One of everyone's favorites, arguably one of the best basketball players of all time. I'm not equipped to talk about this to a point, but maybe there's a guy that could school him one-on-one. LeBron doesn't have to worry about that, though, because LeBron made it to the NBA, and that guy is still playing at Rucker Park, okay? That guy has a lot of clout over there. In markets, it's becoming a lot different, right? With the level field being evened, you can put in your work, and you can outperform Peter Schiff, and you could see him tweet like an asshole every single week because he's bitter, right? You could see people like... just think of other traditional guys that have sort of missed the trade. Mike Green talking to Nick Carter on the, what was the recent podcast? Either way, these guys are coming from a place of being bitter because they missed a trade of a lifetime. Like if they were on the right side of the trade, they'd be happy with it. But, the playing field is a little bit more level now, right? You have access to things where you can do your own research and make incredible investments, right? And you're not limited to that. So it is quite an interesting thing to see, right? So the problem we saw with Gamestop says more about microstructure than anything else, right? Of course, it says that there is this power to the hive and the herd and momentum trades, but what it says is more about microstructure and the ability for there to be an excess amount of shorts taken out that are above the current float of the market, right? So above the current float of the stock. So when you talk about float, think about the supply, right? So Bitcoin, 21 million supply. Imagine if someone could short Bitcoin, short 100 million Bitcoin, right? In excess of the, in excess of the total amount of Bitcoin available, right? In notional contract value, USD value. I'm sure you could create probably a bunch of derivatives exchanges and create all this synthetically to a point, maybe theoretically you can. I don't know where the numbers stack up with that. But hedge funds were able to borrow in excess of the available float, right? So imagine that for every one share of GameStop, there were, let's say the arbitrary number, 5 hedge funds that were borrowing to short that one share, right? So this says something more about microstructure. And when we talk about microstructure, there's a lot of confusion between, sometimes we'll say things like, oh, microstructure, like what's taking place in the low time frames. Microstructure meaning the actual way that the exchange is structured, the actual way that the product is packaged and structured, sort of behind the scenes, right? Microstructure also referring to, the actual order book, what takes place in the plumbing, right? So this says more about microstructure than anything else. Which, it's not that regulators need to regulate retail and say that they can't participate in things like short-term options, which are retail footprint, right? If you look at markets, what is one of the footprints that retail is involved? Options that are traded in and out the same day, right? Short-term options that are exercised, every single week, right? Rather than waiting till the expiry or at even the shortest term one. So remember, American options versus European options. And if I say remember and I take for granted that you might not know what that is, look into it, right? So there is something that needs to be fixed, but it's probably that. It's not that retail should be limited. I think that and I'm going to wrap this up and get to Bitcoin, don't worry. I think that there's one thing to say about this. I don't think that it's necessarily we have to worry too much, right? One thing that we talk about, and I've mentioned this before, I know it's kind of a long traditional market diatribe. I promise we'll get to Bitcoin. One thing I've talked about before is like everyone can see that like it's not that good right now in terms of markets. Everything's kind of weird. Like everything's very disconnected from the economy. Maybe it isn't, right? Maybe it's very efficient actually, and markets are very separate from the economy. It's not like they have to go hand in hand. So we have this speculative craze, right? And it's sort of like everyone's waiting for the other shoe to drop, for something to go wrong and the market to tank again. Risk models have adjusted. I doubt you'll see anything like you saw in March. Same way after the 1987 crash, you didn't see something like volatility models and fund managers and risk managers all adapted post that, right? But really, tail risk is not something that you see coming until it hits you, right? Until it broadsides you. So we all can have this idea of, things are kind of abnormal right now. Traditional markets are overextended, quantitative easing, rates are zero, blah, 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 blah. But the problem that ends up arising is never something you really could foresee. Like everyone's going to mention something that could go wrong. It's usually something that breaks mechanically. Like there's a major disconnect in global markets, and then there's a massive crash, and it's not that we're recovering a few hours later and really able to talk about it. A lot of the time, it's the first big move is going to happen so fast. It's going to catch you off guard. It's going to be very obvious in hindsight. It's going to be easily spoken about in a narrative and sort of post-dictative way. But I don't think that we're there yet. I think if anything, with traditional markets, we see how hungry retail is and how powerful they are. And what you should know is that a lot of people are underexposed to the stock market. So if you start gamifying it even more, and I've been saying for the last year, there's sort of this gamification of markets, and it's something that is popular in crypto too, especially FTX has made it popular. When you start gamifying markets, and that's really what markets are to me, right? It's a game. It's the ultimate game. It's a meta game. This is chess, not checkers, right? This is chess and poker. Okay. So when you start gamifying it and showing retail that they can win and they could come in and pay off their student loans and they could pay off their mortgage and they could run over hedge funds, there's a lot of people that might come in and, get their, dip their toes in this. So this can go on for a long time, especially when the bond market has become, or the equity market has kind of become the bond market, right? So the equity market, the bond market had for a long time, rates going up slightly recently, but I don't think we're going to see rates really rise in the foreseeable future. I don't think that, we have to pay attention to the FOMC meeting today, right? With regard to any kind of mention of a change in interest rates because of something like this speculative frenzy, because maybe things are getting a little too overheated. But they already said they're not going to change. They're not going to raise interest rates for the next year, but you never know, right? So I think there's a lot of money that can come into the market. The last point I want to make before we get into the BTC, I'm like trying to remember my thoughts here, and I have some bullet points, but I didn't write down everything. So they I think TD Ameritrade limited the availability of margin for certain things, right? GameStop. The best thing about GameStop is Kathy Wood saying that it had a $4,000 target. I feel like she just wanted to help that, right? Some of these like Chamath, Kathy Wood, I've loved Chamath for over the last 5 years. I've been watching his things before I got into crypto. He's been someone that I idolize and I really I look up to as sort of like this role model, right? Just a higher level thinker, and he's quick to distance himself from the hedge fund establishment type. What was I saying? TD Ameritrade regulation, right? So I think they limited the availability of margin. So what is this bullish for? This is bullish for DeFi, right? No central authority can shut you down from being able to make transactions and trade what you want and play the game how you want, right? But if you're on a traditional brokerage platform, they could go ahead and just hit the kill switch on you, which is, my whole opinion thing. I want to wrap it up here. Is that you should let a market be a market. Right? It's going to work itself out. It might have to go in this crazy path from point A to point B, but let nature sort of run its course. Don't meddle with it. Once you start messing with it a little bit, you can really change the direction or change the course of it drastically. And I just think that you should leave it to itself because it will self-correct over time. If you want to read good shit on markets, don't go read the newest book that comes out after something like this. Go read some like, or if you want to learn about economics specifically, I would say more than markets. Well, markets too. Go pick up some like Adam Smith, right? Wealth of Nations type of literature rather than any of the newer shit. So yeah, that being said, I think we've covered everything. So yeah. And as I've done that, for a second I thought my mouse was dead. All right, so let's take a look at BTC. Does anyone have any comments, questions, or anything of that matter right now? Looking at Gamestop, I think in the last day it's at like what, a $50, a 50-point range, 50% range, or 57%, 53%. That's absolutely nuts. That's trading like a shitcoin. I feel like we should just take some time off and hop into traditional markets, right? So we just okay. Yeah, so crypto did get away from them. There's this weird thing in the air lately, especially when it comes to things with government, not talking about markets, but now retail pushing back in markets. I don't know. Fun times, right? Okay, Sweet Canary, what stop loss for this week on XBT? I'm not going to answer a question like that specifically. And, I'm not going to give you, unless you're not being serious, I don't know what stop loss on BTC for this week, honestly. I'm going to go over BTC, but I'm never going to say specific. I'm going to tell you what levels are interesting. I'm going to tell you what levels I'm focused on, but I'm not going to give you a stop loss. So that being said. Okay, so I'm going to look at BTC first, take some pairs. Some of the things that I want to focus on with BTC. Okay, so I was pretty vocal on Twitter when it came, and I don't want to reprimand you, Sweet Canary. I don't mean it like that at all. I'm just, I don't know if there's a good area for a stop loss right now, right? Depending on where you're getting involved in a trade, you could have different answers. That's the point. So if you're looking to get involved right here, you want to have it outside the more recent low. I would want to have it under the 50-period moving average. I'd probably want to have it at least one ATR away from the low, right? Probably a half-hour ATR because I think we could actually sweep this low and might still set up decently, but we still have some ground to cover to the upside. So do you want to put how did you enter the trade? Did you enter it based on a trending? Have you entered this trade a lot earlier and it's more along the lines of following the trend, and then maybe you should have been out of the position already by the trend somewhat being invalidated by structure breaking, or maybe you want to see that we have a close under the 50-day, right? There's all these criteria that you might define that are going to be specific to your position, how you got involved, or how rather you would invalidate the position based on how you got involved. Okay, so one of the things that you have to always focus on is market structure. So for looking at Bitcoin, and let me just get this off and then we'll get to it. So this is the 50-period moving average, and so nice thing that TradingView has done, and I don't really focus too much on the TradingView tools. I use XO, I use Sierra charts, but they've updated some of their things. So now their moving averages are what are they called? They are multi-time period, right? So I could be on the 4-hour and looking at where the 50-period on the daily is. So this is our 50-period, right, daily moving average. Okay. So historically, right, sample size of 1 though, this has been a significant level in previous bull markets. Okay, previous bull markets, like I said, sample size of 1, meaning that on the way up, if we go all the way back to the last break of the all-time high, on the way up, we've come and tested this area multiple times. Now, the first test has offered a bounce. First test of a dynamic support, first test of a static support, first test of a static resistance or dynamic resistance. I think that static is always way more important. So static meaning horizontal, like cannot change with time, only change by passing through. The first test is going to be your highest probability interaction, right, in terms of a response off of that, right? So if we're moving down to it, first test of your 50-period moving average should give you the most meaningful response. That historically has been an area where we've come back to. You just look at this as being a basic trend tool. It's moving up with the trend. We've been extended with it for some time. Makes it a little bit less subjective. So now we've visited it once. So if we're looking at, this is the 50 period, okay, right here. This on the daily. So if we just look at a regular one, pretty sure that we're going to see that, yeah, that's the EMA, but we're going to focus on the MA. So the EMA gives more credence towards what's happened recently. So the MA is just a arithmetic mean. So we're just taking the last 50. We're not weighting the last few to give it a more responsiveness towards the end of it. So this is the first time we've come and interacted with it. So just a plain moving average, it's a simple moving average, not an exponential. So this is, or rather has so far, it has offered some type of response. And the idea with this is, you know, systematic trend follower, anyone who's looking to get in at a, you know, potentially valuable area for this trend, or maybe return back to fair value, an area where the trend is slowing down, right, cool off period. This would be one of the areas where you could expect that maybe there's some type of systematic bid. Meaning, like, let's say you're a trend follower and you have a system that says, hey, you know, I buy the first test of the 50 period moving average. Over time, this is dynamic. It's changing, right? So if you just move sideways, this could come up and meet our price. It doesn't have to be that we come back down to it. But in this event, it could be, hey, price moving back down to it for the first time. We're going to be bidding this area. It's also an area where we visually identify the strength of the trend as well, right? So once you start closing through levels, you don't have to worry about any kind of system saying it's a go. You have to worry about the eyes on the chart too. So this is your 50 period, okay? There's a good amount of confluence between there, obviously, and their more recent low that we put in. Now, this more recent low is significant. You know, regardless of your trading strategy, what I always say is I don't give a shit if you trade Elliott Wave, if you trade RSI, if you trade, it doesn't matter, right? Donchian channels, Kelter bands, order flow. You have to be mindful of the higher time frame levels, right? Key contextual levels, areas where we'll see a ton of participation come into the market. And these are your major swing points in market structure, right? Now, your daily levels, so we know this is a weekly level up here now. So I'm going to just anchor these so we could have some lines on this chart. So this is black is a weekly, blue are the dailies. So those are based on closes though, right? It doesn't, you know, a daily close, it doesn't mean that all the activity that took place below here is not significant, because, hey, there was a lot of activity that took place below there. Hell, most of the volume we know could have occurred down there, right? If you look at a daily candle, or if we go to something like this, and we just put this on the daily, right? We'll put this on the daily, and this is just the daily, change the tick setting real quick. This is the daily chart, but with a volume profile, and we'll put a candle on this. You can see that there are times, we'll go back, when, hey, your wick, you know, your daily close might be up here, daily close might be there. And let me just change the ink real quick so you can see. Let's put on a nice shade of red. That won't work because there is red. Let's put on a nice shade of purpley stuff. Your daily close could have been there, right? Daily close could have been there. I think these are red candles, right? I should probably change them so I could see. Yeah, that because that's closing below that, obviously. But all of the activity could have been underneath the candle. So it's not like there's this argument of like, you know, it's not an argument because it's a fucking stupid, it's a stupid argument because there is no argument. Daily levels are significant because they're, you know, a lot of the times they're going to be acted on by systems, right? Based on, and then by discretionary traders they'll say, okay, if we close below this daily level, right? Forget about just any kind of algo that's acting on it, very basic algo. You're going to have discretionary manual traders that are going to say, oh, that means, you know, either a gain of progress if we close through the highs, or a loss of progress that we haven't seen in a long time. Over time for this structure, we haven't had a break of the market structure yet, right? So we just had a series of higher highs and higher lows, and we had not broken any of the lows until this point, right? Until we broke this low right here. So it stands out, right? And you know that with these lows, there's going to be a ton of participation because there's going to be a lot of liquidity down here. There's going to be a lot of stops that are placed down here. Because that low is very significant, you're going to have a lot of adverse reaction as well, based on traders that are looking to take advantage of a breakdown. So once you move through there, you trigger market sells, you close out longs, you just create a lot of participation in the zone. And it represents a key loss in market structure, right? Again, it's the daily level is significant. It represents either progress or lack of progress or loss of progress. But we don't just forget that all of this occurred down here. So I do think it's important to take a zoomed out view, look at a higher time frame chart, just so you see like, hey, where exactly was the market? Put on a line chart, right? That'll help. Because you're not just going to discount these lows, right? These lows are, again, very significant. They represent sort of the areas where the market was rejected, right? So we've seen we rejected at the highs, we've been rejected at the lows. That means sellers stepped in up here or buyers just rolled over. Buyers stepped in down here or sellers began to roll over, right? Sellers became less interested. So we've defined sort of the exterior of the market. And it's simple, right? When you lose levels that have defined market structure, so you lost this low, you had that high, you lost this low, value was developed here. This is where balance was developed, you lost it. Now we're starting to see that the responsiveness from the buyers that was down here and present previously is just not there as it was the last time. There's not the same amount of imbalance either. You know, it doesn't have to be that there was a lot of buyers down here. It could have been that there was a ton of imbalance because shorts got really aggressive, assuming a reversal, and a little bit of activity squeezed them up. You're not seeing that as much down here, which is just saying that there's a market that maybe has a little bit more supply, maybe is a little bit more overheated. But nevertheless, those daily levels are very important. So now we have another daily level though, right? So we made a new daily low. So let's just change this. So again, we had more progress down. So we have now a series of lower lows and lower highs. Okay. So at its very basic form, this is a trend that has changed, right? Even if it's in the short term, it's still something you shouldn't sit and, stick your head in the sand over. Because remember, there are people, I just want to remind you guys that like everything is awesome with the bull market, it's great, from thinking in terms of probability, I'd say you break an all-time high, you're not just going to put in a 2x with BTC, that this was a major shift in the overall trend. We were stuck within a range for 3 years. I don't think it's going to end like that. But there were the same things that were going on back here in terms of narrative. Everybody thought it was just around the corner. Everyone thought we just had to do this and that, and then we were going to resume the trend. And people didn't respect market structure. So whenever things like this happen, I'm not longing into this resistance. I'm going to be hedging there and protecting myself. All right, so that's what I began to do. I actually began to focus on a lot of shorts. But the shorts are not outright shorts. I'm not doing what hedge funds did with Gamestop. They're essentially just mitigating any loss by price moving down because I'm essentially becoming more delta neutral, right? So if you have a portfolio of, let's say, $10 million, because we want all of you to be rich here, but if you have a portfolio of $10 million and most of that is off exchange, let's say you have $1 million on Bybit, you short 10 million contracts, and then you're flat, right? Price moves up, your short's going to go against you, but you have the same USD value. You're kind of locked in that stasis. So you're stationary rather, excuse me. So this is something that I wasn't going to sit and deny, right? And now we have this level that we're suddenly starting to lose, and I think you have to start showing progress for BTC. That being said, these lows, they do become potential areas for bear traps, right? So what you want to see is that shorts are getting very aggressive. We're looking at a big gap here right now. Next area of market structure is down here. You do have that 50 right there, but there's not a whole lot of substantial activity that took place between here to create any kind of meaningful market structure, any kind of resting orders down there, sitting bids, so forth. You have a naked point of control down here, I think. I will put on the session volume. Hopefully. No, that's not it. Right here. You have a naked point of control down here. But, those are like speed bumps. For a loss of market structure this big, going back into this sort of imbalanced trending type of period, those are more or less speed bumps, right? This is where I look for taking short-term trades. I need to see things really develop down there, right? So I'm not taking like I might scale into, I might put some spot bids down there because I'm willing to let that kind of position go against me. You would never want to put bids down here unless you can. I don't want to say that because I'm talking like I've never done this. You don't want to just try to buy this and knife catch this. You want to wait for price to potentially settle, sort of find its footing or show evidence that it is. But these lows, right, these daily lows, they do become areas where bear traps might occur, right? You see an increased activity once price passes through that close. If you look on the lower time frames, once price passes through those closing points, you start to see a big pickup in activity. So if we look at, if we go out right now, go on to the lower time frames, go to the 30-minute, we can see that through this low, we're getting an increase in open interest, right? So we're looking at Bybit, seeing this relationship on Bybit right now where you're having Delta continuously move downward, right? So now we're looking at Delta being at relatively the same lows, slightly lower than this lower low. Okay, so remember this is a lower low. This is still a higher low. This is lower now. I mean, you can see it. I don't even need to mark it anymore. It's lower now, okay? We're having open interest increase. So, you might be building up that fuel for a big rip to the upside, right? And in that, what I mean is, you're getting from point A to point B. So what we're seeing is that there's more aggressive, let me zoom out more. There's more aggressive selling over here than there was over here, just slightly. Open interest is increasing. If you're thinking, hey, where would a trap set up? Hey, it would probably set up around this daily level. That's sort of like a quick assumption to make that you break market structure means immediate continuation. And then maybe you get this structure turning out to be more like what this was, right? That was back at a level, though, retesting. Maybe you get that structure looking more like even what this was, right? Or even what this was. And the idea was these are not identical in terms of the way they look, but you have a first daily level that's established, and that one was kind of a puke. That was an oh fuck daily level. So the immediate return back to that level, what kind of feeling does that create? It creates another oh fuck feeling, right? Where you're thinking, well, that is a level. Like, that's the level we're already returning it to, and now we're going to nuke. So these are where you can see traps build up. Now, ideally, I would have liked to see that this low was swept. Like, if we were up here right now after this low was swept, I'd be turbo bullish, right? Not turbo because, again, I think that there are more important levels to get above. And aside from market structure, so just from a market structure standpoint, let's just lay something out real quick. The lows are great if you retake them, right? So progress is retaking this, 30,800 level, but the daily hasn't closed out yet. We have 4 hours in it. This low right here, that's progress as well. We're starting to trade back above there within previous market structure low right here. That's nice, but it doesn't make a higher high yet. The most bullish structure, now, truly, you can start getting long. I think you could start taking risk if you're trading back above this cluster, right? So if you're doing something like this, yes, there is maybe an earlier setup that you're getting. The highest probability setup, I think, is when you're retaking previous highs, right? So on the way down, you're making this type of structure. Yes, the turn does start with something like this, where you are turning back within the prior low. But I think that the best case, right, the most bullish case you can have for something is, and it does mean it's a little late, right, is let's say that this is your, let me draw a consolidation. Let's say that this is your consolidation. This is everyone's sort of waiting for the other shoe to drop. Came down from here. You nuke that and you rip up. The best thing that price can do is honestly rip up so fast it doesn't give everyone a chance, and then successfully retest these highs and hold those, right? The idea is, buyers aren't giving this a chance to retrace even further. If you start pulling back into, this level, this technically could just be a lower high, right? And, it's a bit more risky. Obviously, the later you take the trade, the more confirmation you wait for, the less of the trade is, the less of the trade you have ahead of you, more of it's in the rear view. But hey, maybe Bitcoin, Bitcoin's an asymmetric trade. It's got plenty of upside. So that's just kind of, it's nothing really, right? And I don't mean that in seriousness. I'm just saying, like, technically that small difference might not mean much, but for a trade it could, right? This is our current resistance, right? From a structural standpoint, this previous swing point around 33.9. These are zones though, so I think you have to look at these highs. So this was a previous range we were accepted within right here. So these highs, really are the areas where price was rejected the most. More recently right here. I like to refine this a little bit more though, right? So you saw there's a ton of activity trapped down here, but still, I think that is somewhat incomplete. So I'm going to get rid of these lines, and we'll look at, I've gone over this before. VWAP is very useful. Okay, sounds like two mics. Let me gets better. No, this mic is really good, man. It's my fucking OBS. Hold on one second. I'm gonna delete the sound for 1 second. This happens once in a while, so let me just exit the mic, and then I'm gonna give you a sound check. Let me know if you could hear me. Okay, can you guys still hear me? Watch, it's gonna be good now. I have a Blue Yeti mic, so I mean, this is what I have, no joke. Oh, you can't see it. It's a Blue Yeti. Yeah, sound is fine. All right. So let me just give it a sec. Can you guys still hear me? This is a pain in the ass. It's just, it's OBS. Once in a while, my thing, it just changes. I don't know what the hell goes on, guys. I have no idea. Anyone who's been around BlockRoots for a long time knows this just happens. I have this like ghost in the machine. It just randomly changes, and the sound goes poor. But now it's the Yeti. It's the same thing. No fucking idea. So anyway, so I've gone over the VWAP before. Let me just pull this back up. Pull the chat back up. I've gone over the VWAP before. Volume weighted average price. Okay. You could think about this as where the market has been putting on risk. So where buyers and sellers have came together the most. Think of it similarly to the point of control, right? So point of control is where most of the volume was transacted. If you're looking at a volume profile, if you're looking at a TPO. So if we're looking at these two charts right here, this is a VP, this is a TPO, right? So VP, TPO. The volume point of control, they're both lined up here, is where most of the volume occurred. TPO point of control is where you spent the most amount of time, right? So the volume weighted average price, well, you could think about it as where buyers and sellers came together the most. So imagine just neutralness, right? So equal amount of buyers and sellers came together. We know that that's not the case. There are more aggressive sellers than there are buyers sometimes the other way around. But if you imagine that even if it's neutral, right, the volume weighted average price represents where most of the risk was put on. So if you have, let's just pull up XO's VWAP. Now we're above today's VWAP, right? This is a session VWAP, so it's split. You see it kind of jumps at spots. But what this is showing us is where throughout the course of the day, most of the risk was put on. So whenever I was trading equities, I was focusing a lot on VWAP. If you're a portfolio manager, you're going to be using the VWAP to get in and out of positions. This is a very liquid area. Again, same idea as like a value area, right? It's dense with liquidity. It is, again, it's where most of the risk was put on though. So if you're trading above it, like we are now, it means that most of the risk was put on below you. So most of the activity between buyers and sellers occurred below. And if you assume even neutrality, right, what that means is if price is above that level, then buyers are in better position, right? Their break-even point is below us, okay? Sellers' break-even point, right? Sellers are in pain at that point. Anyone who sold where most of the activity came in, if it's down here, if price is above them, right? So if we're looking at the VWAP, and this is an anchored VWAP, but here's our anchored VWAP. So what this means is if we're below it, and this is not the daily VWAP, I'm going to get into why I have this, but if we're below the VWAP, sellers are in better position, okay? Longs are in poor position. If we're above the VWAP, longs are in better position, sellers are in poor position. This is the break-even price from wherever you have it tethered to. So if you're looking at a daily VWAP, it's a daily. Session is broken into session. Daily might be rolling, so it might be rolling over time. Just think about it as from whatever time period you're looking at, it's where most of the risk was put on. Now you could begin to see how this might get used if you're looking for trap traders or considering maybe what side is in control. You know, so at BlockRoots, we have a tool called the Clark indicator. Nothing special at all. It uses the 20-period moving average. So you see based on where we are, you know, above it or below it. If we're red, we're below it. If we're above it, we're green, right? That's a 20 period. That's one thing that some people on the daily use to define who's in control, bulls or bears, right? It's a Bollinger Band center line. But the VWAP is arguably a much better one because it shows you where that actual activity came in. So if you're above the VWAP, right, buyers are in control for the daily session, right? If you're below VWAP, sellers are in control for the daily session. You could extend this over the week, right? You could put a weekly VWAP on and see who's been in control from, you know, the beginning of the week till now. You could also use it as sort of a meaner version tool, right? If let's say that, I'm just going to draw this. Let's say that this is our, let's say we're looking at the daily session, and you know, our VWAP is like, let's treat this like it's the day session right here, because I have a nice piece of upward price action. Let's say our daily VWAP is all the way down here. That's pretty extended from VWAP, right? If hypothetically our VWAP is all the way down here, we're pretty extended from VWAP. You know, buyers lifted this up pretty high. Maybe they're a little overextended. What would we look for? Maybe a return back to VWAP to add, or maybe we would be selling based on standard deviations difference away from VWAP. There's so many different ways you could use this. Okay, I'm not going to sort of touch on every single one. There's many ways to skin the cat in trading. Remember that. So, and any tool you can use to trade well. Some better than others, obviously, but as long as you're consistently applying it and developing an edge around it. So that being said, it's really important actually to anchor a VWAP. So it's great to see like a quarterly VWAP, a weekly VWAP, a monthly VWAP. I want to know who's in control over the last week. But even better, and this is something that is popularly done in traditional markets, especially when there's a major catalyst, is using an anchored VWAP. So I noticed that TradingView actually has one of these now. Anchored VWAPs are especially useful from key changes, right? So from major events. So let's say like a major break, major breakout, major breakdown, major loss of market structure. Because what do you want to know? You know, there's a few things that I want to know right now, and I have them set up already. So I want to know, so we'll put this on, where was most of the risk put on after the all-time high was established? So let me put this back because it's actually a day lower. So this anchored VWAP is going to be set to the 9th. So that's at the all-time high. So from the all-time high, where was most of the risk put on? So we know that, we know that sellers are in control right now. We lost market structure. But where specifically is most of that risk put on, right? Averaged over time, right? The volume weighted average price, or averaged over this period. You could look at a non-time based chart, right? So from the all-time high, we're sitting below where most of that risk was put on. So sellers have been in control. In the short term, I think that it's also useful to know, where most of the risk is put on post a break in more recent market structure. So this break and the daily, where was most of the risk put on from that break? So right there, this is sort of a VWAP from that breakdown. So that is around 31,846, right? So think about 32,000, right around here. And then from the all-time high, VWAP's around 34.3. So needless to say, I think that if you're trading at 35 now, up here, you have a really good case for being bullish, right? At least for a revisit to the high. Maybe you have more of a range developed because you're above now where most of the risk was put on after that breakdown. So if you think about all the aggressive shorts that got involved, all the sellers that got involved late, that are maybe in futures positions, you're going to be past their pain point at that point. More locally, I think, which is relevant, is if you're past the more recent breakdowns pain point, which is that break-even level for shorts and for longs to get flat again is around 31,846. So just an idea of where volume and value has been established over this period since the break. So if you break back above here, maybe you're at least looking for a revisit back above to 33.6, 34. And that's a trade from 32 to 33.6, right? 34. That's a potentially a $1,600, $2,000 trade. And the idea is, at some point when you're back above there, they're going to be maybe underwater, right? You just see where most of the risk was put on. It's very useful to anchor this from significant levels. So TradingView has this tool. This is the anchored VWAP. Got to do more study to make sure that it's accurate, but this is the proper way to use a VWAP, to anchor it from, if you have earnings in traditional markets, if you have something happens in oil futures, major supply shock, tanker blows, whatever. I want to know where most of the activity occurred post that event. Rather than like arbitrarily just being like, I want to look at the weekly and the quarterly, and from this platform to that, it's different. And it's just a really good way to use the tool. Yes, anchored VWAP, exactly, 5 shorts. A great way to analyze trap traders. That's what most of my trading is trying to do. Who's in control, who's off sides, and if they're off sides, where is their max pain point? And this is not max pain in terms of options, and you've heard this term thrown around a lot lately, I'm sure. But max pain meaning, where is the point once price starts putting them in pain, Where do they start to get off sides? Where are they screwed, right? Where can the market start speeding up once we're getting past their break-even point or their pain point? And this is all obviously built around the idea that people are going to react and close their positions out, and then other people are going to jump on. So this is what a lot of higher time frame trading and lower time frame trading boils down to, right? Recognizing these types of setups and these types of shifts in control. Let's see. So BTC, I think that, this is not good right now, right? It's not good, but many times we've had second dumps into lows that seem disgusting, right? And the idea is to try to throw as many people out of position. Now, one thing we're seeing is quarterlies, we're beginning to sell off a lot more. So in terms of futures term structure, if we're looking at now's price, right? So this is now, this is normal market in contango, right? So let's say this is Q4, right? This is Q3, Q2, and then first expiration now, spot price, perp, whatever. Market in contango over time, confident market, normal market structure for BTC. We're not in backwardation yet. Backwardation would be if this was the spot price here, and over time the futures expirations were lower price than spot price. We're seeing it flatten out, which is a good sign. So those further out expirations are beginning to sell off a little bit more, right? So just a sign of confidence beginning to maybe drift, people hedging, people expecting lower prices, that term structure compressing. You're also seeing that funding is beginning to start to be a bit more less than neutral, more negative. I wouldn't just take this first switch as the sign to go long. So if you look at the perp premium, right, index indicator, you're starting to see that for the first time it's going negative. I wouldn't just jump and say that this is a buy signal right away. It's a sign though. I mean, the best case scenario is that it spends a lot of time doing this and more time doing that. Because what you want to say is that with all of this, right, futures trading at a discount, right? If we look at, for example, Coinbase is at 7.72, Bybit is, what is it, $12, $15 less. No, wow, that's a good, wow, bad math. That's a good, Bybit is trading about $80 less than Coinbase. So this is a great sign, right? It's a sign that the spot market is there, right? And you want to see that progress over time, though. You want to see that the futures market continuously gets aggressive, price moves sideways, maintains at least the last low, right? So we have one area to maybe focus on, this kind of recent inflection point. It's more local. Price continues to move sideways. Funding maybe goes more negative. You're getting more of that negative sentiment. Maybe the quarterlies begin to compress even more. We start to see them sell off more. In terms of basis, right? The distance between the current spot price and those further out expirations, that window begins to close. Those, carry trades, they begin to diminish. So you want to see that occur more than just like one day. I think that's obvious. You want to see this build up over time because what you want to look for is this trap to set up longer, right? More time for shorts to jump off sides. And you're beginning to see that, like I said, that spot is trading at a premium. So you could do something like this. I have all these on the same chart, and I'll go on to the 30-second chart even. And what we can see is that this dark shade of gray, this is the spot market, okay? Red, purple, that's Bybit and Binance futures. This is Bitfinex in green, okay? So the spot is trading currently above the futures market. So fingers crossed, this is a good sign. This could be the beginning of what gets uglier though. So remember that, right? At some point, your futures market bots are going to be starting to work in tandem with what's going on in the spot market because everyone wants that increased exposure. So again, I wouldn't jump at this. I would really prioritize, like I said, market structure. And we get into more details on, BlockRoots with regards to market profile. If you're interested, go ahead and sign up. One thing I don't necessarily like about this TPO is, ultimately you want to see you're trading above the point of control. Great. We're above the VWAP. That's great. I typically like to see that the lows are not as actively bought, right? So we're looking at the delta down here being very blue, or it would be green if you have it set up, by default on your setup. I like to see it's more red down there, more trapped activity, but this could be shorts closing out. It just happens to be that open interest is still going up. So, it could be that delta could be from shorts closing out. If they're closing out their shorts at the low, I would have liked to see that you broke this low down here. Could still get it, right? Broke the low, had more of a profile that looked like this. Skinny tail, big excess at the low, buying tail, a ton of selling. So you might have had a TPO that looked like that, but you had a volume profile that looked more like this, right? So this is a trap. Start trading back above this low, and it's green light, right? Might not get that. Might be front ran. Spot might have picked up a little sooner. Markets are way too dynamic to say, hey, A, B, C, it's a wrap. We have the trade. Sometimes it works out that way. Sometimes 3 details line up. Sometimes 2 details line up, and they look less favorable, but the trade goes further, right, in the direction that you would normally look for more, I guess, evidence in favor of that you didn't get. That's what we have right now. I would prioritize structure because everyone respects structure. Structure makes you go, oh shit. These little details, paying attention to order flow, paying attention to TPO, that gives us the little incremental edge to be able to front run a lot of people that are maybe just relying on one thing on the higher time frame. But hey, you have to respect what everyone else is respecting, because breaks in market structure, they could lead to changes by higher time frame participants, and you can't fuck with the macro guy who put on a big position on the break of the all-time high and now saying is the trend is invalidated in his eyes, because that is your lower time frame levels. They are where lower time frame traders can play. Bigger shifts in market structure is where you bring in bigger types of players, and once they change their mind, you're fading. You're trying to piss sort of in the wind. You're trying to swim upstream, but we'll see, right? The other thing to focus on is there have been many times, right? If this is like, let's say that the bull market's over, fine, whatever, we'll play it like that. Let's say it's over. Big leg, distribution probably a lot longer. It doesn't have to occur longer, but many times longer, distributions have sort of poked the lows for 3 months, 2 months, right? And each time it looked like, oh my God, this has to be the breakdown. And then you look back 2 months later and you're like, holy shit, we're still testing this low. And then instead of looking at the daily and saying it's 2 taps, we're realizing, no, it was like we needed to focus on the weekly chart, right? This is the first tap on the weekly. We're going to go on to do something like this. You don't know, right? You just have to listen to what the market's telling you. Okay. So, yeah. Nima Valad, good point. So the VWAP from the break of all-time high, I was looking at that as well. I think they're around the same area, right? So if we just look at break of all-time high, so it's a great point. That was one of the things that I was looking at yesterday. So we'll go to break of all-time high. I mean, this is a nice spot premium right now, guys. But the idea is like spot can get offsides too, right? These retail participants can be gung-ho right now, and they could be setting up by buying the top. Who knows? But this is a great sign. You just have to go with that. So around 19,897. So we're looking at right around, let's just say right here, December 17th, anchored VWAP from the 17th. Give away some BTC after this because I've been kind of just going on. Spent a lot of time focusing on BTC. I wanted to give you guys a good stream though because haven't been active lately. It's a lot of people streaming lately, just kind of covering the same basic shit. Although I always say my buddy Cred, he has a fantastic stream. He's showing me love and I show him love too. So let's see, where is that? Oh, gotta go down to this. So the VWAP from the break of the all-time high is kind of right where we are, lining up with this break right here. So yeah, right around 32. Yeah, just remember this. You could chop around here, so it's not like the market has to puke, but it's not a good sign, right? It's not a good sign. You can make the argument though that this is a return back to fair value for the larger trend though. So just remember, everything is like, you want to have a few details line up in your favor so it's not just one you're being overly biased about and leaning towards. So hey, funding going negative, spot picking up, we return back to fair value. You could start to say maybe that's a return back. We return back to the VWAP post break of all-time high. Maybe this is a great value buying opportunity. It lines up with the 50 period. It's a great trend following tool. So you could kind of convince yourself of anything. At the end of the day, you got to take a trade. So my point is like, this is not. You could say this is bearish. It's not like we're extended from it yet. So we're kind of we've just kind of returned back to fair value for this entire move. Thoughts on the cash inflow. So we'll see. MicroStrategy has a conference coming up. We'll see. You never know. Like, Michael Saylor could go down like a hero or like a big idiot if Bitcoin keeps going down. And institutional guys, they like higher prices, right? So we'll see. I don't like to bet on things like that. You could have a bunch of people that are already pre-positioned expecting a positive response from that. So the market could be pricing that in. So yeah. Yeah, so with Shroom, I'll wait on. I'm gonna be hanging off on Shroom. I was in and out of Shroom for a while. You guys know that. I have my reasons why I'll wait on Shroom to show up a little bit more. Um, just my specific reasons. I don't want to get into it. Like you said, something about the delay and project. Um, I understand. Like I'm a big account, and people kind of expect me to be super supportive of something. Like at the end of the day, like I'm trading for myself, and if I'm not confident in a position 100%, like I don't stick my neck out there for something that's kind of a punt. So I'll wait for Shroom to show maybe a little bit more on their side, because right now it's kind of everything is. It's in a I'm waiting for BTC to give more of a clear sign. So the monthly candle looks like shit. That's right. Bitcoin is a really small sample size of events, so we like to look at something like this and then compare it to previous events, and you have to look at it on a log chart to get an idea of what the truth is, because otherwise you're not going to normalize it, right? Compare it to previous movements based on percentage. So look at it on a log chart. First things first, look at it on a log chart. It is approaching the biggest monthly wick, right? Compared to this one. We haven't had anything like that yet, but we've only had 12 years of price action. You could expect that in 10 years, there'll be a lot of things that have happened many times over, and we won't be doing this kind of look back at the past to make a judgment on the future sort of thing. So yeah, this doesn't look bad. I mean, this looks like shit, excuse me, but it doesn't necessarily have to mean that it's a monthly candle, right? It's a 24-hour market, 365 days a year. When the monthly closes on that day, the candle could look like shit. It could open up the next day and look incredible. It just happens to be that people make decisions based on this. It's not a red monthly. You could expect at some point there would be a red monthly, though, right? So, I mean, technically it's a green monthly. But, let's look at Link. And App Eagle with 69. What's up with you, man? Come on. So Link, price discovery. Let's look at Link first on a different higher time frame chart so we can see the full BTC first. In this market, you want to look at it versus BTC. So we'll go to, here we go. Link versus BTC. Looking at previous level within market structure. These lows. Sorry. So on the way up, damn, got an itchy nose all of a sudden. On the way up, reclaiming these lows, looking like it's putting in a reversal against BTC. Chart looks good against BTC, right? As long as we got this big rip up, happens to be wrong timing for the rest of the market. So chart looks good against BTC. Last 4 days kind of underperforming, but damn, I got to trim my nose hairs and my beard or something, guys. Just made a significant move. It's my beard. Just made a significant move against BTC. If we're looking at it on the USD chart, you're not having the exact response that we would want to see post break of the all-time high. You want to see more legs. I ended up cutting this position. I ended up cutting a lot of my positions, by the way. I ended up cutting almost, I don't want to say all of my positions, but a good amount of my positions. And it happened to be the right decision, so I'm pretty happy about that. But break of all-time high, this is where you want to see support develop. If the market is moving on momentum, right, it just might be sometimes things don't happen at the right time for what Bitcoin's doing. You wanted to see this retest right here, this initial one, and then this continue. You don't want to see this return back and chop back at this level. Same thing with ETH, right? Mess around at this level, break the all-time high. ETH is still putting in nice progress, right? Grinding upward. I think you would want to look at ETH if you're looking at alt still, right? What is kind of ETH doing? Is it giving us maybe the green light? Link, I think, great long-term prospects. Just wasn't setting up in the short term as I wanted. I want to see if it gives more of a pullback over here, right? Pull back to these highs, sort of consolidates around this, $19, $20 level. We'll see. It's not showing the most amount of, Jesus Christ. It's not showing the most strength, right? Not performing as strongly against BTC as ETH is. ETH is grinding up against resistance a bit more. So we'll see. Alpha. Okay. Colombian Bam Bam. Alpha is great. I wasn't in alpha at all. Yeah, Aave was, we've been in alpha. John, you got to turn your own sound up, man. I don't have control of that right now. My sound is up. Aave, SNX, Uni, Sushi, these have all been killers, and we've been talking about these forever now. So yeah, ETH, we'll talk about ETH. So ETH versus BTC, right? This is great. This is a really nice chart. Again, it's like Bitcoin got a lot more follow through. BTC did great. All-time high, checked off at once, blast back through it, get a ton of continuation. You kind of look at that and you look towards something like ETH and expect the same behavior. Against BTC, ETH is holding up very well though, right? So holding this previous range high, so for this entire period, holding this level, that's great against BTC. Just moving sideways now, it's fine. Looking at it on the USD chart, series of higher highs and higher lows still, right? So I don't think you want to lose any of these lows. I think that this is the low you want to maintain now, sort of now that you're putting this in and establishing this slightly higher low. If you're starting to favor this, I think that, I don't know where the market is, right? It depends on BTC, right? We start to see BTC flatten out. ETH is a really obvious long, I think. BTC starts to move upward, ETH is a long. This could very well break down, right? But, it's up in the air right now. Everything is kind of fragile. It is, though, like I said, technically making a series of higher highs and higher lows. This all occurring at resistance, grinding against resistance is bullish, okay? It's just easier to say that when it's grinding against resistance and it's above, still at the highs. So we'll see. Being listed on the CME, I don't think they're going to be shorting ETH, right? Might be taking advantage of a basis trade, but I think you're going to see long exposure. So yeah, I'm a coffee and tea guy. Tea after 5 p.m., coffee before then. Espresso in the morning. What's the best leverage to use at all times? Leverage is irrelevant. Depends on, you have to have position size properly. Leverage for counterparty risk, right? If you're thinking about using leverage for increased exposure, you're thinking about it the wrong way, especially if you say you're a novice trader. That's how you blow your account. So the leverage will depend on how much capital you have on the exchange, what you're representing off exchange, what your position size should be based on the trade and based on the risk that you're defining. If you have a certain amount on if I have a lot of money off exchange and I have a small amount of capital on the exchange and I'm trading based on my off exchange amount and I'm employing those same risk parameters, my leverage might be high, right? Because, I'm using that small portion on the exchange to represent the off exchange amount, right? Let's say I'm risking 2% of the trade. Leverage might be 5 times leverage, but it doesn't mean I'm exposed 5 times in excess of my portfolio value. In traditional markets, like when we talk about leverage, when I was using, margin and leverage trading equities, I mean, if you're a retail guy, you might get, like if I was trading on a traditional brokerage platform, I don't mean to say like if you're a retail guy, none of us are hedge funds getting 20 times exposure. Think about where Lehman was at the highs during the financial crisis. I don't even remember. It was like they couldn't even have a move against them that would have went against them 3%. That would have wiped their portfolio. Wish they did. So what's it called? So the leverage is irrelevant, right? Position size is everything. But in equities, the term leverage is thrown around because people usually use more exposure. So you might have access to you got to put up 100% of the margin. You might get 2x leverage, 3x leverage on something like TD, which means you could 3x your total value, your portfolio. So yeah. For crypto, it's more for the use of protecting yourself against counterparty risks, so you don't have to expose yourself onto the exchange, so you could have greater capital efficiency. So yeah, I said so yeah twice. Yeah, yearly open, kind of just like it's not that important. It is, but it isn't. These levels are only important when traders make them, right? That's why the more popular ones are more actionable. So yearly open, you might get an initial bounce, but I wouldn't say it's like you have to, well, I mean, what do we do? Wait for like the yearly close to say that now it's a long? You might say like maybe wait for a daily, weekly close above the yearly, a 1 month. Usually if you're like looking at weekly time frame structure, you go down to the daily for confirmation, right? So the yearly is not like the most significant thing, honestly. SNX. So yeah, we'll take a look at SNX, and I'm going to give away some BTC and we're going to wrap it up. So SNX, we know that this is on a rip. Where's SNX versus BTC? Yeah, just looking awesome. Great trend against BTC. First thing you want to know is that it's outperforming BTC. I think that a lot of these, honestly, guys, are going to be cooling off, though. We said that in the newsletter yesterday. So I said that, if you follow us on the newsletter, if you're in the newsletter, you've seen that we said, we have opportunities, but we hit the mark on all of these for the last 6 months with all of the major DeFi things. That's what we've been talking about, right? We were spot on with Sushi, SNX, Aave, Uniswap, Comp. That's all we've been talking about. Some people are like, why don't you talk about other things? These things have fucking destroyed everything in the market. So you might have gotten bored if we didn't share, some 1 million market cap shitcoin that might have pumped 30% yesterday and dumps 50% tomorrow. But these runners have been the horses to bet on in the race. That being said, I think that these are going to cool off and a little bit more money is going to funnel back to BTC. So that's another reason why maybe downside is going to be mitigated with BTC, because you still have all this excess capital to a point in DeFi, right? It's not like there's been a ton of exposure to DeFi. You can look at DeFi dominance, still very low. It's around 4%. Link represents a good portion of that. I think Link represents like 25% of that. But that money can siphon back into BTC and provide some floor, not a floor because it's very insignificant, but mitigate the downside somewhat. It's all about capital rotation, where flows are going. When you have these big run-ups in certain sectors, in equities, that's where a lot of the trading that I did when I was trading on behalf of other people was being able to identify flows, right? Not worrying about specific equities, XYZ individual asset. It was more about being able to recognize certain shifts in flows, right? Certain sector rotation. And I think that you see the same behavior in crypto as well. Thoughts on undercapitalized trader not using a stop loss in the view of position size unlikely to get liquidated? I would always say in the beginning to anybody, you should use a stop loss. There are times when you could use your liquidation level as a stop loss, right? If it fits appropriately in that way that that you're not going to get slippage and incur any further loss, you should have your stop before the mark, before it gets triggered so you don't get liquidated. But I would always say to use a stop loss. Me personally, when I'm trading manually and scalping on the lower time frames, I will put on a tail risk stop. Not something I want to advise because it's like, do as I say, not as I do. A lot of trading rules kind of become very muddy when you're starting to trade professionally on your own. Even when you just get more experience, you realize like, oh, that's not a real rule. Like they break that all the time. You'll know what you can break and because technically a stop can limit your upside, right? There's a lot of times you get stopped out when, maybe of course you expose yourself to a lot more risk, but certain setups, I won't even have a stop that's that close. It'll be a tail risk stop, which is like a stop where it's like, if the market falls off a cliff, I don't lose, 5% of my account. So I think we're going to have rotation between Polkadot. Yeah, that's the last one, and I'm not going to take any more recommendations to look at. I think you're going to have rotation the same way you normally see it. You see rotation between larger caps. So we had SNX, these larger cap DeFi projects, down to mid caps, then down to small caps. And then when the small caps pump, it's like, all right, where's the party going after this? It's either Bitcoin moving back up, more money coming in, or now we're starting to have a game of musical chairs, and it's the same money sloshing around. Dot, what can I say? Nice uptrend against BTC. I think all of these are kind of pulling back now. At least with Dot, you have this nice clean market structure. When you started to form this last time, though, you broke down, trap shorts down here. You had more of a pullback. So if we're looking at Dot, right, from this entire leg, maybe that's like the 0.5318 fib. I don't really subscribe to fibs strictly, but they do give some insight into where you might see, again, systematic activity, a bid, right? So if we're looking at this leg to this leg, maybe we're looking at around 13.6. I don't know if, I don't think we're in an area anymore where DeFi is going to have a ton of legs in the short term. Just looks like the market's a little bit more disconnected, a little bit less of a rising tide. And I think that maybe you get a little bit more of a range play within here, but then a pullback to around 13.12. Could be deeper, right? I'm not 100% confident in these things right now, though. So yeah. All right, so let's give away some BTC. Okay. All right, so let's see. We're going to do two pieces of actually, what should we do? Two pieces of trivia. All right. So let's see. All right, so two pieces of trivia, and then we'll wrap it up. And these will just be random questions. So what is the name before possible upturn? Nah, I'm done. Any idea when ETH might drop to in the near future? I don't know, man. I went over ETH already. You gotta rewind the video. Rewind the video. I went over ETH. Like, we're market structure still being respected. We're grinding against resistance. I don't have a crystal ball to tell you when it might drop. So I know right now it's like everything is a little bit more correlated though. So Bitcoin being, so here's something. When Bitcoin's in a sort of sensitive spot, everything else is going to be, waiting as well. Nothing is going to suddenly move independently. You might have this one-off case where one is rocketing up. You remember all those periods when during a bear market even, there's always that random altcoin that just shot up. Doesn't mean anything, right? Yeah, it's all good, man. So all right, so first trivia question. Okay, so what is, let's see. Whenever I retire and buy a racehorse, because I have horses now, right? So we have 3 horses now. We have 3 of our own horses if you don't include my wife's mom's horses and her friend's horses. Which to a degree my wife is kind of responsible for as well. But everyone takes care of everyone else's horses. What is going to be the name of, let's see, what is going to be the name of my racehorse whenever I am going to be in the Kentucky Derby? And this is kind of a joke, but I've said this before, that I was going to name one of my racehorses this name. First person to get it. So first one who shows up, least amount of latency in their feed, I don't care what it is. The first one that I see that names the horse. I've said it before on Twitter. Let's see. Boom. D. Ross gets it right. D. Ross gets it right. I think it's D. Ross, right? Felix. No. Perpetual swap. All right, D. Ross. Send me your Bitcoin address. No. D. Ross got it with perpetual swap. It's a great horse's name, right? So D. Ross wins $100. I think this is D. Ross's like 3rd or 4th time. You could keep winning though, right? Fastest to the fastest answer. It's fair. Yeah, no. Clark is that's already one of the horses' names. So that's why the name is Kenner and Clark, right? My name is Ryan. Yeah. And then the next question, the last question before we give away the last $100 in BTC. Yeah, good job, Koa. Is let's see. What else? Okay, I want to think of a good one. I'm just trying to pull these up randomly. I give math ones before. All right. Now I've asked this one. Shit. Okay. One second. Okay. So what was unique from a statistical standpoint? Oh, no. All right. So let's see. In the last 10 months, when was the single largest drop that we had in a single session? What date was it? Yeah, you could answer D. Ross, of course. It's a fair game, man. If other people want to win, they got to answer faster and better. We don't give out participation trophies here. The second place is first loser. The largest drop in the last 10 months. No, I'm saying 10 months. Hold on one sec. I'm going to pull something offhand real quick. I'm pretty sure I'm trying to give you guys kind of meatballs because I don't want to say yet. I just want to make sure I did it first. Just want to make sure that I did it without giving it away what I'm looking at. Okay, I did. All right. So hold on one second. Let me see if there's anyone who answered it. Let me also look at something off screen so I don't have to do it on screen so someone could answer before someone else. One sec. Okay. All right. Okay, I got it. All right, so let me scroll up. So all of you in the beginning are wrong. All right, so I'm starting from the top. There you go. Good stuff. I saw someone got it all right. Someone got it all right. Someone got it already. Okay, so a lot of you guys are saying March. I think you might want to count a little bit. The largest single loss in 10 months. All right, so here we go. Jinin? I don't know. Jinin. I don't know if I'm pronouncing your name correctly. But January 21st, actually, last Thursday, was the largest single day loss. Okay, 13%. So, good try, guys. So, someone already answered it. Doesn't matter. Doesn't matter, had it, but was late. So here we go. Jinin. Get this on record. Okay. Did he acknowledge that he won already? Okay. So Jinin, you got to message me on Twitter. Yeah, D. Ross is like, well done. Someone else won besides me. All right, guys. So Ross sent me an updated message with the Bitcoin address. And yeah. And Jinin, if I'm pronouncing your name right, if I'm not, either way, redeem your BTC. Message me on Twitter. I go by Cantering Clark. Okay, you know who it is, though, right? I mean, I assume so. Cool. All right, guys, it's been a pleasure. Let's look at BTC one last time. I mean, hey, decent response, right? This would not be the first time that we actually did not kiss a level and then returned above and actually had some type of bullish structure established afterward. So if we're looking at this structure right now, you do have this sort of funnel that's forming. You're coming to a point, right? Regardless of where you define it. So, you know, this right now, we did not take out the low. But if we start trading back above those risk points that I mentioned, you know, if you start trading above 34, 35, yes, then it's kind of clear. But at that point, it's kind of in the rear view, most of it. But I wouldn't just, you know, remember, daily level, even though it's recent, this is your support right now, right? So I think that you have to give respect to the fact that now we're holding this 30,700 sort of daily close level. And this so far is a decent response. And I think more importantly is, holy shit, that response. Wait 1 second. Is the response we have, is this shared across all exchanges between spot markets? Let's look at XBT. So BitMEX. Would you look at that? Coinbase with the $237 premium. Well, would you look at that in your best Matthew McConaughey voice? I'm listening to, my wife bought me the book Green Lights by Matthew McConaughey for Christmas. I love Matthew McConaughey. He's a great guy. He sounds like a great guy. I mean, what do I know? But I found out his audiobook was narrated by him. So I feel like you read Matthew McConaughey. I've always been a fan of his. You have to listen to it in his voice. And that is a pretty damn nice premium we have. We have a $200 premium between the spot market and the futures market. So this is spot support. Like we have not had this. Is something wrong with the exchange? Am I missing something, guys? You know, in the chat, is someone going to tell me that these other exchanges are down? It's pretty amazing, right? Cool. All right. Good stuff, Jenna. Thank you. All right, guys. Everyone, it's been a pleasure. Hope you guys enjoyed the stream. It's been nice to get back on here and do this. And I wish you guys well. Have a fantastic week. And yeah, like I said, Josh and I will be picking up these streams again. So on behalf of myself and Josh, we want to thank you guys for tuning in. And until next time, exercise, proper risk management,